Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 27th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. Right now, a narrow range after yesterday's heavy selling pressure here. Very narrow range of price action, 19.5 points, and just 37% of average range. This is developing here at the lows of this recent slide, especially since the trap at 45.50. We've now dropped over 200 points and are sitting at 43.29. The fact that we've pushed to 43.50 on this side here, that's a big time area of support, and if price continues to hold below that zone, it could open up a continuation downward toward 4200. So 43.50 is very important. Breakdown transition day through that level yesterday. Any retest of the 43.50s from below could be an opportunity for bears to defend and extend the losses to the downside. 43.50 will continue to be the big level to watch. If at some point we have a big snap back above that level, then perhaps we're snapping back toward 4500 and perhaps back into the range to keep this 300-point range here. Failure here, and we're rotating back down with 4140 in sights. Taking a look here at the NQ. Let's grab the NQ here. You'll see with the NQ overall weakness, very similar to the ES, but not quite as much weakness. We haven't reached the previous month's low yet. That's 14.6. We've still seen a very steady cycle of weakness here over the last couple of weeks. But overall, we're still in the trading range. Still in the range here. You can mark off that 14.5 zone right there, 14.6, and up to the 16K level, and that's your range. So with the ES, we've actually transitioned a bit through the bottom of the range, whereas this one, we're still sitting above the previous month's low. So a bit less weakness out of the NQ right now, but we're going to continue to watch the 14.6, 14.5 zone. This zone, again, could provide the next break or bounce up ahead, and so we'll continue to watch it closely. If we take a look here at the crude oil chart. Now here's crude oil. With crude oil, we've seen quite a bit of strength. One of the things we talked about in the previous session was how the previous rejection was developing. Wasn't quite a strong rejection day just yet, but it was developing very nicely, especially off the previous week's low. It was a failed breakdown out of that 4-day range, but it didn't break out of the 4-day range, so it's a narrow 5-day with a failed new low. On a 5-day range basis here, we can quantify this up to 5. It shows about 5 to 6 points of potential range up ahead. 5.2 would be the 125. If you look at the recent price action over the last several months, this market's been able to get about 6 points fairly easily on a 5-day basis. So we're looking for about 5 to 6 points ahead. From 88, 6 points would be 94, and 5 points would be 93. So that quantifies right in that 93 to 94 point zone. Today, already a big time trend day structure, a huge continuation already, a breakout through the top of the 5-day range, and we're looking for a move toward that 93 to 94 zone. We could also take today's low. Today's low would be 90.4, and since that's the breakout low, we could be projecting from that low. So from 90 bucks projecting higher, you're looking at 95, 96 now as the potential upside target. So more upside likely ahead. One thing I would say is if we do reach 94, that market structure edge, watch for signs right there of potential rejection. If we do get a strong high, we could get a higher high failure that leads us back to 88, 89, maybe even back to 84. All right, that is crude oil. If we take a look here at gold futures right now, gold showing a bit of weakness here and actually breaking through the prior pivot lows. First time in a long while where we're actually breaking a prior pivot high or low. In this case, breaking the low from earlier this month, also breaking the low from last month. So this is a steady continuation. One of the things we mentioned before was how price was coiled up right at 1950, and then it looks like it took 1950 offered here, which began this period of weakness out of this range. One of the things that we talked about before is if we are going to break down back through 1910, 1900, then it's going to open up a return back to 1810 to 1830. 1830 would be the previous 2-year closes. 1810 is CVPOC. That could be about where we go. Now, to finish the month with this amount of weakness, especially away from the apex of this coiled up range, next month, any pullback next month into this lower value relationship could be sold for an extension downward toward those lower targets below. Lastly here, looking at the YM. The YM right now up marginally, about 1/4%. You'll see right now that this one is also below the previous month's low. That's the previous month's low right there, 34.062. Currently below that zone. Big time breakdown the previous session at year-to-date VWAP and the 200-day moving average. And this is CVPOC. So these are all measures of longer term value for the year. We're right there at those levels now. Now overall, are we going to be able to hold this edge? 33,800 is the key level. Keep an eye on 33,800. Yesterday's low here, 33,815. As we mentioned before, the 800s have been the big market structure levels. If we get a good test and reaction at 800, perhaps we can bounce 1,000 back up to 34,800. A failure at 33,800, and you're opening up 32,800 down below. So big time zone here at 33,800. Keep an eye on that one here for the YM. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.